My portfolio is exploding. What is going on? This is what we'll talk about in this week's episode number 27 of my investment journey. But before we get into it, let's do what we always do and invest 1,000 euros, which we have here, into the MSCI emerging markets. Let's go. And boom, there we go. Let's check out the Wealth tab to see where the portfolio stands overall, and we are at 31,000 and change. This is ridiculous, okay? Just to give you a perspective, I invested 27,000 into this portfolio, and I'm up 4,000 euros already. Now, for the longest time, we've been wrestling with the 1,000 euro profit mark. Then last week we had 2,500, and then in 1 week we went to 4,000 profit. I mean, this is absolutely insane. And of course, this is partially an effect of having a larger portfolio than, let's say, a couple of months ago. Now, the same amount of change in the underlying asset value has a much bigger absolute effect on my wealth, but also the market is going crazy. And that's what we'll look at now. So you can see here last week, all the markets, at least in aggregate, have gone up. The MSCI World is up more than 1%, and the MSCI Emerging Markets is up more than 4%. What is going on? Year to date, the MSCI World is up 7% and the MSCI Emerging Markets a ridiculous 18%. And this is completely crazy because we always use this rule of thumb, and many of these guys in the investment circles say, well, expect when you invest in the broad market, let's say the MSCI World, to achieve a 7% annual return on average. Some years it's higher, some years you're gonna lose. And now it's early May and we have the 7% basically. So it remains to be seen what happens. And the one thing that's looming over our heads is, of course, the Iran war. I'm not going to bother you with all the details here, but basically it's been a back and forth. So there was some signs that Iran is considering a US proposal for a permanent ceasefire, a truce, maybe even a peace. And Iran seemed quite open to it, while Trump said, well, then the Iran war will be over very quickly. Then, of course, there was back and forth. Both parties exchanged strikes in the Strait of Hormuz. Trump then says, hey, ceasefire remains in place despite these strikes, and the Iranian TV saying situation is back to normal. So yeah, US and Iran exchange fire amid a declared truce. But Trump, of course, tries to say that the ceasefire is still there. But at the same time, of course, Trump threatened more if Iran didn't agree to a peace offer. So take it or leave it, more or less. What did that do to the oil prices? Well, they are up and down. Right now they are at the $100 mark. This is Brent oil. But yeah, $100 still way higher than in the past. And one thing that should concern everybody is that global oil reserves plunge at record pace. And so this is an article in Financial Times and they analyzed it. In April, global oil reserves plunged at record pace. Okay, stockpiles of crude fell by nearly 200 million barrels, according to S&P Global Energy. And they say an inevitable market reckoning is coming. Overall, about 6.6 million barrels a day shortfall, or at least stockpile depletion. And this seems to work out pretty well with the numbers that we've always been talking about. So we said 20 million barrels a day go through the strait. Some of it can still go through the east-west pipeline of Saudi Arabia, and some of it may also go through this UAE pipeline. And then, of course, it's also a reduction in demand. If the prices are so high, you're going to see a plunge in demand as well. So overall, the oil market has lost 1 billion barrels of crude oil due to the Iran war so far. And here it says what I said before. The demand is also falling fast because the high price causes people to use less oil, but this is outstripped by the loss of supply. So less demand, but even less supply. And so that's why they say a higher crude oil price is yet to come. And now it's time to ask yourself, how much do we have left? And actually we have globally 4 billion barrels left. But a large share of that is tied up in running day-to-day operations. So keeping the refineries running and so on. And so that's why you should also view analyses like these with caution. So we have the strategic crude oil inventories in selected countries. And you see China is all the way up top here, US, Japan, and so on. But take this with a grain of salt because you cannot use it immediately. And what's even more relevant is that this is only crude oil. The products that we use on a day-to-day basis are actually refined products. And here a Goldman Sachs research says there's only 45 days supply of refined products left, such as gasoline, diesel, and jet fuel. And particularly large declines are observed in Asia and in Africa. So this is the real problem. And one can only hope that the situation now really resolves between US and Iran. But, what the experts here say is the worst of the crisis is ahead of us. So you see, the news are terrible. I mean, yeah, there are some peace talks, but really, we are in a shitty situation. And the only thing that's crazy is that the market does so the exact opposite of what you'd expect. So the S&P 500 reached all-time highs. We were talking about this 7,000 point mark for the longest time, and now we have basically flown past it, and now we're almost already 5% above that mark. So 8% gain in the last month, and the Nasdaq is even crazier with 14% gains. And all of this goes to show one thing. You don't know what's happening and why it's happening. The only thing that I can say that I did well was just being in the market. And while a crash may be coming, I'm confident that I can weather it, especially because I'm already up so much. I mean, think about it. I'm up 4,000 euros. That means I'm up 16%. So basically, I could lose 16% and then I'd still be up. And if you think about it, a 16% loss is actually kind of brutal. Yes, in the worst crises that we've seen, the losses were even higher. But even if that happens, I'm not going to fully eat that loss because I already have a cushion that will offset some of the losses. Okay, so 30% down from here means more or less I only lose 15% of the principal I invested. And so once again, we have proof market timing doesn't work. Time in the market beats timing the market. All right, that's what I leave you with for this week. I'm going to continue to observe the market so that you don't have to, and we can talk about it next week again when I will make my next trade, and I hope to see you there. Until then, all the best and take care.